And the RBI Monetary Policy Committee will come out with a decision on key interest rates soon. Economists expect the MPC to maintain status quo at a time when the second quarter GDP growth has come in at 7.6%. According to S&P Global Ratings, India is set to become the world's third largest economy by 2030. S&P also said that India's GDP growth would be around 7% in 2026-27. Ratings agency Moody's recently slashed China's credit outlook to negative and expect China's annual GDP growth to come in at 4% for 24 and 25. The Federation of Indian Chambers of Commerce and Industry has said that the growth momentum witnessed in Q2 is expected to continue for the next few quarters. Most recently, the industry body has pitched for a continuation of the FAME scheme for electric vehicles and a FAME 3 policy, as a sudden stop to subsidies may increase prices of electric vehicles by 25%. Joining us to talk about India's economic growth outlook, expectations on reforms and support for manufacturing and the energy transition is Shubhrakant Panda, President of the Federation of Chambers of Commerce and Industry. Mr. Panda, thank you very much for joining us. Looking at the slowing growth in China and other economies, how do you think India is poised when it comes to contributing to global growth?
Good evening, Parikshit. I think you have asked a very important question because clearly India is in a sweet spot right now, and this is something that we have talked about repeatedly, that a trifecta of a large domestic market, sustained reforms and favorable demographics has really propelled us into being the world's growth engine. And, currently India contributes about 16% of global growth. But recent reports suggest that over the next 5 years, this is likely to go up to about 18% or so. And, this is, as I said, a trifecta of factors. Most importantly, I think reforms and the fact that during the COVID pandemic and its aftermath, the focus was on structural reforms. And that is what is now beginning to pay off. It's not, of course, the Q2 GDP numbers are very, very encouraging, especially for manufacturing, which has, I believe, a 13.9% growth. And that too, there is no base effect. So this is, I believe, the second or the third highest growth without the impact of a base effect. So a lot of things are falling into place. The reform measures, the focused execution, initiatives like production-linked incentive schemes. And of course, geopolitics is also sort of, playing its role in the sense that with China beginning to slow down, and not to mention, companies worldwide looking at diversifying and de-risking their supply base. This is a unique opportunity that we have, and we must do everything that we can to seize upon it. Right. And I must that is happening in terms of a focused effort to really attract investment into India.
Right. Now, coming to what the finance minister said earlier today, that don't have too many expectations from the vote on account. It will just be a summary of expenditures, and you will have to wait till July next year for the full budget. Don't expect any spectacular announcements. But having said that, is there any sort of continuity in policy direction which you're hoping for, even in terms of reforms? What would you be expecting from the government over the next 6 to 8 months?
I think the short answer is more of the same. But I think the finance minister was absolutely spot on when she said that, there is by practice, you cannot expect much out of the vote on account because it is simply to keep the government funded until elections take place and the new government comes into play. But, I think what we expect is not just continuity in government, but continuity in reforms. As I said, if you look at how fiscal and monetary policy have worked in tandem to sort of boost the growth trajectory in India. We see that continuing in the sense that, clearly there is a lot of reforms which has taken place to enhance the ease of doing business, to reduce the cost of doing business, the massive investments in not just physical, but also digital infrastructure, and measures like decriminalization, etc., which are all little irritants which come in the way of doing business. And I believe that, there will be a mandate for sort of, I don't know if we should call it phase 2 of reforms or deeper reforms. There has been a lot of focus on structural reforms. We need to look at certain procedural reforms which hold up activity in India to an extent. But generally, I would commend the government for the lifting which it has done by way of front-ending capex. And there are definitely signs now that private sector capital expenditure is beginning to gather momentum. The FICCI survey that you had, you were referring to, the manufacturing survey, indicates that close to 80% of respondents have indicated higher activity. About 55 or 57% are indicating plans for either expansion or investment in the next 6 months. Certainly, geopolitics in terms of two conflicts raging around the world, it does sort of act as a little bit of a dampener. But having said that, I think there is a lot of positivity about where India stands and where we are headed.
Right. I'd like to ask you about FTAs because globally, and we were speaking to Sanjeev Puri of ITC earlier today, he also expressed concern about exports and a volatile global environment. Having said that, do you feel that it is concerning that we've not been able to conclude more FTAs this year? We had concluded one with the UAE, one with Australia last year, but today there is, of course, no word on the FTA with Canada, but even on UK and the CECA with Australia, we don't know whether they'll be concluded soon. And the same goes for the FTA with the European Union.
Well, let me put it this way. First of all, when it comes to FTA, I think, the world is looking to engage with India, and so are we. And FTAs are today not just about trade, but about access to technology, about climate financing, a lot of other things beyond just trade. What I think, as an industry body, what FICCI has clearly endorsed is the government's strategic approach to FTAs. We must pick and choose what we sign, what we are getting into, but more than anything else, ensure that there is reciprocity and a level playing field. From an Indian industry perspective, what I can tell you is that Indian industry is competent, confident, competitive, and ready to engage with the world. And all that we want is a level playing field. So, if some FTA negotiations are taking a little bit of time to conclude, so be it. But I think we would much rather get it right than rush into something. And, in fact, we have seen that in the past, that, FTAs which were not fully thought through, and we came on board. We have, Indian industry has not benefited as much as, the counterparts have. Now, there is, as I said today, there are fundamentally, I think Indian industry is stronger and competitive and capable of benefiting from FTAs. But if it takes time to dot the I's and cross the T's, then so be it. But I wouldn't certainly be worried about taking a little bit more time to ensure that we get a good deal for Indian companies, while also, of course, conceding where we need to in order to have that element of reciprocity.
All right, we've run out of time, but Mr. Panda, thank you very much for joining us here on the program, telling us about your growth outlook for the Indian economy and our approach for FTAs as well. Time for a short break here on CNBC, but coming up, ITC's Sanjeev Puri is optimistic about India's growth story and believes the economy has great potential. A special conversation on the other side. Stay tuned.
CNBC-TV18, embarking